Today's conversation is sponsored by First Generation Capital Partners.
While it doesn't absolutely offset their W-2 income or their business income directly, and we'll probably get into other ways where that can happen, the thing that they should realize is now they're earning more money, but their tax bill is not necessarily increasing, which is the same as saving on taxes.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. And yes, I am your host, Billy Keels, and I am really looking forward to welcoming you back to today's conversation because it's another one of these absolutely amazing, awesome conversations that I know that you are going to take away lots of actionable insights from. So really quickly, I've been seeing like a lot of people starting to post on your Instagram stories and on your LinkedIn, and even some on Facebook, the podcast, and you're sharing that across social media. And that's really, really cool because you're actually helping other people to know about the podcast. So if you're doing that, or if you're not doing that and you feel like, hey, look, I want to share this across social media, take a screenshot, share it. It would be absolutely awesome. And also too, the thing about helping with leaving your honest written reviews, let us know what you like, what you don't like, and so you can get more of what you want. That would be absolutely appreciated. And that's one of the main reasons we continue to move up the charts. Also, if you want to check out any of the previous episodes, go to firstgencp.com/podcast. And you can check them all out there. And so let's jump into today's conversation because you're going to get a lot out of this, especially if you're thinking about the financial aspects of running your business. If you're already in the business and you feel like you need to get more precision and insights on the business actual strategy that you're doing, today's conversation is going to be absolutely awesome. We have a gentleman who has his own firm. He is a CFO, CPA, and he is really about giving you precise insights, especially as it relates to your hard assets business. So today's conversation with Larry D. West III is going to be absolutely awesome, and we're going to get to that just after this. If you've wanted to know how to create precision business strategies so that you can develop timely and accurate financial insights for your long-distance investing journey, then guess what? Today's the conversation that you're going to want to listen to until the very last word. I promise. You know why? Listen to this, because today's guest not only has an undergraduate degree in English language and literature. I want to find out more about that. He also has a master's in education as well as an MBA. He had early roles in education as well as business and financial consulting. That sounds awesome. He's also the co-founder of West Learning Academy, as well as Fractional CFO, tax strategist, as well as the founder of Precision Business Strategies. It gives me great pleasure to welcome to today's conversation, Mr. Larry D. West III. Larry, welcome to the show, man.
Hey, thanks for having me. Certainly appreciate it.
Yeah, man, I'm looking forward to this. I know that the entire Going Long family is going to get so much out of this. Everybody, get your pens, get your paper out, get ready to put your thinking cap on, because this is going to be one of those conversations that's just going to help take things to the next level for you. So no pressure, by the way, Larry. He's thinking to himself, what in the world? No, so this is, so listen, Larry. So as you know, we're going to kind of get into a couple things, but everybody really wants to know, because the first question that everybody wants to know is, can you help us understand, where are you in the U.S.?
Yes, indeed. I am in Frisco, Texas, which is just north of Dallas. It's a suburb of Dallas, and it's a place where everything is happening and everything is growing. We got the Cowboys headquarters, Toyota, and a few other larger companies in the area.
Wow. That sounds pretty exciting. That's fantastic. Which leads us to question number 2, which is, help us understand, what is the most positive thing that has happened to you in the last 24 hours?
Yeah, great question. As I think about that, it'll go back to my kiddos. And so normally our regular routine is before bed. They always say, "Hey, Dad, can you stay with us?" And so that's time where, of course, out of the busy day where it's just calm, serene, no distractions, and they're winding down, getting ready for bed, it's time that I just spend with them. And so recently we were traveling. This is just yesterday. We were traveling and we're in a hotel room and they're in a bed literally right next to mine. And they still ask the same question of, "Dad, can you stay with us?" And to me, that was one of those heartwarming moments of, this is not just a home routine. This is something that they really value. And that's just amazing. It was an amazing feeling as a dad.
Fantastic. You mind if I ask how old your kids are?
Yeah, my kiddos are 5 and 7.
Oh, okay. Fantastic. 5 and 7. Enjoy it, man. enjoy it because it's fantastic. Before you know it, they're going to be 13 and 15 and yeah, they're going to be on to other things. So absolutely appreciate you sharing that. It is a precious moment in time, and we're going to continue the conversation. You know what? But before we do that, Larry, I kind of have to admit something to you. I know we've had conversations before, but I didn't really tell you this in advance because I don't tell anybody this in advance. But I'm a guy who tends to I'm a recovering perfectionist, first of all. So that means I tend to kind of hold the bar like at a really, really, really high standard. Sometimes, Larry, it gets me to the point that I do things that are absolutely absurd. Absurd to the point, it's kind of like trying to tell your entire backstory in 2.5 seconds, right? That's absolutely absurd because you've impacted way too many lives. You've helped way too many people to be able to tell your whole backstory in 2.5 seconds. So forgive me, but it is kind of one of these character flaws that I have, and I'm very open and honest with the Go Along family. And so I'm letting you know now. But more importantly, I really am going to ask you for 2 things. And I know you're the guest, so I'm asking you for 2 things right up front. First and foremost, I would love for you to tell your own backstory in your own words. And don't be as absurd as I was and try and do it in 2.5 seconds. Take the time that you need so that we get a chance to get to know you, number 1. And number 2, if you could also help me and help the Going Along family, which is, can you talk to us about some of the major decisions that you've made to get to this point in your journey, Larry? And then we'll see where you and I take the conversation from there.
Yeah, actually, that's really good, and I think just the journey itself is littered with major decisions. So, I think the best place to start is really undergrad. As you alluded to in the intro, I started my career really as a English literature major, and my intent was to go on, get a PhD in English, and teach at the college level. And as I went through undergrad, got that done, checked the box. I went and got a master's in education right after that. It was probably 2.5, 3 weeks before graduation. We had just turned in our thesis. We had passed that defense, and we were getting ready to graduate. And I say we, I'm speaking of my cohort that I started the program with. And it was one of those things that just hit me and said, look, I don't really want to do this. 2 weeks before graduation, we all had been accepted into UW-Madison's PhD program. And so we all had the plan laid out for exactly where we were going, but it just didn't feel right to me. There were certain parts of education, there were certain parts of higher education that when I looked down the line, I just didn't like where that was going from a career perspective. And so I made a very quick and hard pivot. I went and talked to the business school. I enrolled over there, and I went ahead and finished the master's degree, but I enrolled right away in biz school and started working on the MBA in finance and accounting. Now, how did I end up in finance and accounting is because throughout the program, I've always had a keen interest in numbers in terms of understanding school budgets, in terms of understanding higher ed budgets, school business finance, all of those things. And so that just felt right. And also the other side of that is quite selfishly, I thought I was going to jump into some high profile investment banking job as soon as I finished that MBA. And of course, that did not happen. Once I got close to graduation, we moved down to Abilene, Texas, which is like the middle of West Texas. And there are no investment banking jobs there, right? And if there is, it's someone who's in that position and is not leaving for quite some time. And that was a rude awakening of doing this hard pivot from education where I had my entire life somewhat planned out to this new area of business. And I had no idea what to do or how to do it. I had a very humbling experience too, because all of the jobs that I searched for, they wanted multiple years of experience. Starting salaries were kind of 25, 35K. You'd be lucky to tap into 45 or 50K, depending on where you were. And so the first job I had was entering, literally, it was a bank, entering mortgage applications, the handwritten mortgage applications into the computer, just data entry back and forth. And I kept saying to myself, like, I need to figure something out. There has to be something better than this. And I kept searching. And luckily, one of my wife's professors, her husband ran a financial planning firm. And so through a couple of conversations, he gave me an opportunity to work with him. And one of the things that I was tasked with was figuring out, hey, what are the tax implications for the things that we're telling our clients to engage in? And so I became the researcher in all things tax. And that opened the door right there of the strategy behind tax planning within itself. So whatever strategies we were working on, I'm inside the IRS codes, talking to CPAs, calling tax attorneys, figuring out what the true strategy is. And that's where I really started to cut my teeth and build out my career. Went on to work for some traditional CPA firms after that. And then I decided, hey, it's time for me to step out and do my own thing and start to build what is now Precision Business Strategies.
And so when you get that moment, Larry, to step out, to go out, do your own thing, you build your own business where you're serving others today. You take a step back and you look and say, hey, listen, I was gaining this experience because you put yourself in a position to do that. People could say it's luck. People could say it's not luck. I believe we create our own luck. But when that luck meets preparation, you create the opportunity from it, right?
Absolutely.
There's a couple of things that you mentioned that I really want to go back, because you kind of said that you were in education and then you pivoted. You knew that you wanted to go to business school, but those things for me are always pretty interesting because you could have selected to go to science. And I know you mentioned that you enjoyed coming up with the budgets, but I think that's kind of like the end. Like that's where you ended up going. But maybe you could just talk us through, because sometimes people think there's always this master plan. But talk to us about why it was business versus biology versus something else. I mean, beyond just the part that you did share with us, which is, you enjoyed that budget part, but you could have selected anything, man. And you went that route.
Yeah, so there are really two sides to that. One, coming up in the education side of things, our focus was really on policy and analysis. Mm-hmm. And while folks have these grand ideas of different educational policies to change learning outcomes, to change the dynamics of teacher prep programs and all those things, it all leads back to money and where the dollars are flowing. And if you follow the dollars, you essentially see the priorities, whether it's a district, a higher ed institution, or what have you. And so that ingrained in my mind, quite frankly, follow the dollars. And that tells you everything. Money is kind of controlling a lot of the policy and analysis that's happening here. And so when you juxtapose that with, well, where are the opportunities? A lot of what happens in the education space is highly politicized, and not speaking in terms of political party. I mean, politicized in terms of its structure, right? There's a set way to do things. And if you step outside of that dynamic, it's curtains, right? It's all over. And so I wanted to take the skills and the talents that I had started to develop really on the analysis side and providing insight, and take that and do what I wanted to do with it. And I saw business really as that kind of free-flowing, free-form way of executing and doing so. And then the other part, I'll be honest, and my perspective on this has changed over the years. But at that time, I'm 22, just graduating there. I need money, right? And so I look at what's happening with some of my friends that were over on the business side of things, and I liked those starting salaries a lot more than I liked the other ones.
Yeah, and I appreciate that transparency, because a lot of times people are like, yeah, just go after whatever and stuff like that. And so, yes, there is the part of the analysis, the insight that you enjoyed doing anyway, based on an educational foundation that not only is something that you enjoyed, but you also received the insight, the training yourself. But then also at the end of the day, you need to kind of be able to not just pay the bills, but take it to the next level. And so, that's fantastic. Listen, because today's conversation, I really would like for us to be able to jump into a couple of things. Now, we typically like to keep things at a very high level here. Maybe today we're going to go into a little bit more detail. It will feel like detail, but we're not really going into detail. It's just the area of expertise that Larry has. I just want to make an overarching statement today, and I'm sure, and this is for the Going Long family. We're going to talk to Larry, and I are going to have some conversations. He's going to share with us some of his insights. He's going to give us examples. By absolutely no way, shape, or form is he giving anyone any tax advice during this conversation. I'm sure he will say it at other points in the conversation, but I want to make it very clear. He's talking about different principles, examples, just to help you have things that you can talk to your own tax team about, right? And if you don't have a tax team to talk to, I'm sure that Larry may be able to help you with that as well. And we'll talk about that during the conversation, at the end of the conversation, et cetera, et cetera. So, Larry, with that as a background, I do want to talk just very quickly. I kind of want to put there's an elephant in the room. It's one that I used to live with for a long time. I think you and I talked about this, that I was someone who worked in the corporate world for 26 years. The last 10 years, I was also building my own business on the side that ended up being really started with real estate. And now I call it real assets. And one of the things that quite frequently comes up for someone who is I'm going to say an accredited investor. So you know what that means. The Going Long family understands what that means. We talk about it a lot because we just talk about it a lot. That person who is like I was, busy software sales professional, maybe their spouse is working, they have their own business like you. And so they are both not in the real estate business. They are very busy professionals, probably working 80 to 100 hours a week. And they hear us talking quite frequently about, hey, listen, you know what? If you invest in real estate, it's going to bring your taxes down and all that kind of stuff. Well, and I only ask you this question because it happened to me for about the first 5 of the 10 years as I kept investing in real estate. And I thought it was going to bring down the income tax that I was going to pay at the federal and state level. So maybe if you could help to just educate us on when we hear that question of investing in real estate is going to bring your taxes down, what could that mean, number one? And then if I don't really hear the answer, then I'll maybe ask you the question maybe a little bit more directly. But just from a high level, if you could help us understand by what that could mean or what that probably means when we're saying that investing in real estate will lower your taxes if you're someone who is a very busy professional and your spouse is also a very busy professional.
Yeah, I love that question because it's one that gets, one is not talked about enough, but it's one that gets misconstrued, especially as people talk about the abundance of investing in real estate. And here's what it comes down to. For the type of professional that you described, essentially, they're likely going to be hit with what's called a passive loss limitation, meaning their income is too high to take advantage of the passive losses that come from real estate. The IRS inherently considers rental income and its losses as passive, which means it cannot directly offset active income, i.e. their full-time job, as you mentioned, and or their business. And so what tends to happen for those folks is they start earning more money, right? Because they've got the passive proceeds coming from real estate, but they don't necessarily pay taxes or they pay very little taxes on the money that they're earning. And so while it doesn't absolutely offset their W-2 income or their business income directly, and we'll probably get into other ways where that can happen, the thing that they should realize is now they're earning more money, but their tax bill is not necessarily increasing, which is the same as saving on taxes.
Fantastic. So I love that you, number one, just broke that down for us, because a lot of times, Larry, what I believe helps everyone become a much more informed decision maker. And whether that be an investor, whether that be a purchaser, whatever the case may be, when you are more informed, then you feel much more comfortable. You feel much more confident about the decision that you're making. The thing that we want to help people avoid is any type of surprises that could happen, right? And so if you think one way and you don't maybe know how to ask the questions, or you don't know which questions to ask, then sometimes that information can ultimately work against you. But so you've just talked about maybe the next step, Larry. And so I would love for you to maybe take us a little bit further down the path and help us understand what you meant by the second part of your phrase when you said, well, what they could be doing is it's more tax efficient, but also maybe open eyes to, how can this real estate game work? Or more importantly, the passive income streams work for someone who's a busy professional.
Yeah. So let's start with what's called real estate professional status. And that's one that the listeners have probably heard thrown around quite a bit. And it's not as simple as some may make it out to be. Essentially, what most people know about real estate professional status, it's an IRS designation that allows you to take the passive losses from real estate and offset your active income, that being your W-2, your business or your business income. But to qualify, you've got to meet certain standards. The first is 750 hours in real property trade or business, in which you materially participate. The second standard is more than half your time has to be in real property trade or business. And so when you're a busy full-time professional, and perhaps your spouse is a busy full-time professional as well, and neither of those are primarily in the real estate space, you've kind of taken yourself out of the running to qualify for real estate professional status. But I'll still talk about that third point in case they do check those first couple of boxes. The third point is you then have to materially participate in your rental related activity. When you can check the box on those three things, it opens the door for you to potentially qualify as a real estate professional and use the losses from real estate to offset active income. But again, when we're talking business professionals, especially if it's a dual income household and both are, perhaps full-time in different areas that aren't related to real estate, the door is kind of closed on that. So then we start to look at the second layer of that strategy. Well, we know the IRS treats rental income and its losses as passive. How about we start to look at investing in other areas that produce passive income? Now we've created an opportunity to marry the losses that come from real estate with the passive income from our other activities. And again, we're earning more money, but our tax bills, our tax brackets are not necessarily increasing.
So fantastic. We're going to get into that right away. But the thing is, and this is where it's important to have a professional like Larry on your team, right? Because when you're a busy professional, this is what I did. I was doing this for 26 years, right? And it wasn't until the last probably 5 or 6 of the years that I really had the team around me that I could start to have these types of questions with Larry. And once again, he's helping you to think about different principles, thought concepts that you could dive into deeper. But you mentioned one of the concepts, and you've kind of talked about it twice. But when you say material participation, I think you gave part of the definition, but I just want to make sure that the Going Long family understands when you say material participation, what exactly does that mean?
So there's a very specific 7-part, what they call a 7-part test for how the IRS determines material participation. And we can pull those up and Google them, and you can read through the 7. But the way to really understand it is you have to participate in a managerial role or decision-making role for the business in a consistent and ongoing basis, meaning you have to be in the heart of it, making decisions, and not just investor-related decisions, right? You have to actually be making decisions that impact the direction and dynamic of the business. That's what we consider material participation. Think about it like this. If we were to pull you out of the business and all the activities that you do, could it still function? And if the answer to that is yes, then you're probably not materially participating. If the answer to that is yes, you probably are materially participating. So it's hands-on engagement and running the business and making decisions.
All right, fantastic. Appreciate you helping to break that down once again. And as you said before, you can go to the U.S. tax code, and there are literally 7 points you can go. But once again, as Larry's sharing with you different principles to think about, different examples, these are things that, once again, you can talk to your tax professional about, so that you can become much more informed. Now, Larry, I'm going to just mention that maybe we can take a step back because you were leading us into that area, becoming more tax efficient. So one of the things that I understood you to say, and I'm going to extrapolate here, you were talking about different passive losses. So you have different passive activity losses, and you have things that are passive income generators. I believe you would call that, if I've spoken to my tax team enough. If not, please correct me. But maybe you could talk to us a little bit about that, because I think you're taking us down a path, or you're definitely taking us down a path that's going to help people to open our eyes to new things that we're probably not thinking about because you're a busy professional. And maybe you haven't asked these questions yet, but maybe you could break that down for us a little bit more, the passive losses as well as the income generators.
Yeah, that's a great point. And I love going in this direction because to me, it's the heart of tax planning. If it's not part 1, it's definitely 1A or 1B. Essentially, as you're earning income, again, actively in perhaps W-2 or business or different things like that, the thought process, especially from a wealth building and tax planning perspective, becomes, what do I now do with that money to create passive income? And passive income has different connotations depending on if we're on social media versus looking directly at the IRC, right? Basically,
I'm only laughing, Larry, and thank you so much for saying that, because I agree with you. It is, sometimes you see passive income on social media and you're like, well, that's not passive income. Hang on a second. Yeah. It's actually the Internal Revenue Code. There is a definition of IRC, but sorry about that. It was interesting. Thank you.
Yeah, no, that's a really good point. And the idea is too, you want to make your dollars work for you and always keep them in circulation. And so as you're thinking about where to strategically place your money, you want to look for tax efficient places. Well, real estate happens to be a really great example, right? Because you can buy a property or perhaps even get involved in a syndication. You have the cash flow that comes from the rental income. And then you got this huge power of depreciation that gives you a major tax advantage. That essentially wipes out or effectively reduces the taxable income. And it usually leads to losses. Well, if you've got passive losses that are over here, And now you've got another place to place your money that produces passive income. Again, an area where you don't materially participate. Someone else is making the decisions. You are simply getting mailbox money, I think is a great way to think about it. Well, now you've created a situation to where income is coming in that you don't have to work for, truly passive in nature and passive by way of the IRS definition. And you've got these real estate losses that's also producing income, but now you've got these depreciable losses. You marry those two strategies together, that could be really powerful because you got rental income, you got passive income from this other investment over here. And again, your tax bill is not necessarily going up. And that's how you get really efficient and build some wealth.
So efficient wealth building is fantastic when you can accelerate it. And you're talking about some of the ways that you can do that is even better, right? In terms of principles and theories. So I'm that busy professional, Larry, and I understand real estate because this is something that, we've talked to and we've heard lots of people here on the podcast specifically talk about real estate and being able to generate that passive income. We've now talked about the losses, but where else could someone go who's a really busy professional to find out where they could maybe fill up some of this big hole that these passive losses are creating so that they can take advantage of that today? Maybe they're just so busy and they don't even know where they can think of other things that are maybe not real estate related.
Yeah, part of this is going to be talking to some of your associates that may be in these spaces. And I always temper that by saying, be careful of the water cooler conversations, right? Because oftentimes people will paint a very huge picture without the minute details. So you can get some insight there. But then the other part, connecting with your team of professionals, your financial advisor, your tax planner, as well as your attorney. All three of them should be on the same page because they can identify these different opportunities. Your advisor perhaps could identify different investment opportunities. That's then vetted by your tax professional to make sure that lines up efficiently. And then it's blessed by your attorney to make sure there are no liability implications there. But I think having access to a really good team of planners is going to be the best place to start. And you don't think of those folks as an expense, right? You think of those folks as an investment. Correct. And the better they are at planning and getting more efficient for you, the better your return on investment is because their planning should basically either should decrease your tax liability, which again, that's money well spent.
Can you just say that one last time? Can you repeat that, please? Because it felt positive, and I just want to make sure people understood that.
Yeah, absolutely. Absolutely. You look at your team of professionals as a return on investment. Whatever that fee is that you're paying them, essentially their job is to help you tax plan and lower your tax liability. So if you pay them X, but your tax bill dives by Y, that delta creates a really good return on investment for you. You think about it the same way you would any other investment, whether it's stock or real estate. You're putting money in and you expect a return, and that return is efficient tax planning.
Thank you very much for reiterating that. And so if you were running on the treadmill or you were cooking dinner or something like that, hopefully you heard it the second time. But there's also there is a language that Larry used that I really want to help drive home to the Going Long family, because this is important. This is one of the issues that I had early on. I didn't realize it until later. And Larry's just shared it with you twice. So the first part is that he talked about making sure that you have your advisors, right? That you have your advisors with you. And also he used a key word, your planners. He did not say your filers. He did not say the person who's going to do your taxes. He talked about your advisors and your planners. And he's helping you to understand there is a difference in language, right? This is a gentleman who studied English language. And so he knows a little bit about that. And so you should expect to have your team members on board. And if the first invoice that you receive shocks you, just make sure that if that shocks you, if what you received in terms of not having to pay legally is greater than the invoice that you paid, then that's a positive investment of your time, your energy, and you just have a new person on your team as a planner, as an advisor. Don't do what I used to do, which is how do I get my taxes done as inexpensively as possible? Because you can typically leave a lot of money on the table legally. And so so hopefully that makes sense for everybody Going Long family, because what he's just shared is absolute gold nuggets. Larry, I do want to ask you one question as well, because a lot of times when you are a busy professional, you are around the water cooler and you don't know what you don't know. Not adding a lot of pressure here, but if there's like the type of question that someone could ask to maybe suss out if the person that they're talking to really understands what they're talking about, or maybe they're just repeating what they heard someone else say, so that person who asks the question knows if they need to go back to their team or not, or it's a relevant question to ask. Would be a nice, broad, open question that person could ask to really suss out if what they're hearing at the water cooler is real or it's just kind of water cooler talk?
Yeah, great question. You know, the first place, and I just did a video on something similar to this. I'm getting into the TikTok and IG reel side of things, and there's tons of water cooler conversations over there. I think the first question that they should ask is, well, where did you get that insight? Mm-hmm. And if it's from a friend of mine, a buddy of mine, an associate of mine, take it with a huge grain of salt. If it's from my CPA, my tax professional, my EA, then I think it's one that's worth considering and at least bringing back to your tax person to see how that fits in your world. But we too often, especially in the social media space, there are folks that are just spewing poor advice out there that could really get people in a lot of trouble. And so if it's not coming directly from someone that can defend you in the face of an audit, that is willing to support the tax plan or tax strategy that they're putting in place, it's not one that I would advise you engage in. And certainly, again, take it to your tax professional to see if their situation mirrors yours, where you can use it and it's applicable to you.
Absolutely fantastic. So that's a great question to get insight in. Larry, also, I'd like to know just if you can help and share with us now. I mean, because this is the type of question where you can find out, hey, listen, did it come from your advisor? Did it come from your planner? Or did it come from the other person that was also in the same situation? Where can people find more about how you're helping other people, whether it's IG or it's TikTok or just your normal website? I know we're going to get into that later, but I'd like for people to know now.
Yep, absolutely. So we're putting out more content on social media. All of my social channels are fairly the same. It's Larry D. West III, and the third is really 3 I's, right? And so that's same on Instagram, LinkedIn, and Facebook. And we're sharing these different ideas and insights on how folks can do effective wealth and tax planning.
Okay, fantastic. So that's Larry D. West, and then the capital I. Is that correct?
Yes, that's it.
All right, perfect. So we'll make sure that you can check them out on the different social media channels. And what's the name of your website again?
It is pb-strategies.com.
Okay, perfect. pb-strategies.com. Appreciate that. I do want to maybe pivot just a little bit, Larry, because I know one of the things that we'd mentioned in the beginning, we talked about the tax strategy. We also talked about this role of fractional CFO. Now, I work for a very large enterprise software company, market leading. It's got 3 letters in its name, from Germany. And I typically spoke to lots of CFOs. So this world is something that I'm pretty familiar with, or feel very familiar with. Help someone understand today. They may think, CFO, fractional CFO, is that like accounting? Is that bookkeeping? What exactly does a fractional CFO do? And how can that help someone who is an investor and or business owner?
Yeah, that's a really, really good question. And that's another one that has been changing over time as the role of the CFO starts to evolve. Mm-hmm. But essentially, they are your advisor. They're your partner inside of your business as you're making business decisions. They're not the people that do the hands-on bookkeeping and accounting, but they provide the analysis, they provide the insight, and they help with the decision-making on the direction of the business, whether that's making an investment in a certain area, pulling back on certain things. They are the right and or left hand to the CEO in many respects.
All right, fantastic. So I appreciate you sharing that insight. Definitely, usually is not the bookkeeper. They are not actually doing the tax stuff, but they're more, would you say that it's fair to say that they're typically in the cockpit with you looking forward versus looking backwards as a primary kind of responsibility?
Yeah, that to me is a perfect way to describe it. And there's value in historical data, but that kind of tells you what happened already. Your CFO is right there, as you mentioned, in the cockpit right next to you, giving you insight on what's about to happen down the line. what does our forecast look like? What happens if, we have another pandemic? What happens if we have a 30% dip in revenue? What happens if there's another rent moratorium? How does the business pivot and shift so that it does not fail and run out of money? So their insight is always, 4 weeks, 8 weeks, 4 years, 8 years down the line, as opposed to memorializing things that happened last month or last year.
Yeah, love that. And would you say it's also fair to say that they're also helping you to make sure that the right hands are on the money that should be on the money, and the hands that should not be on the money are not on the money, i.e. kind of internal audits, compliance, things like that?
Absolutely. They should have complete oversight over every dollar that's flowing in and every dollar that's flowing out. Again, you don't want them to be in the minute details of actually doing your bookkeeping and accounting. Otherwise, that takes away from the time of doing really good insights. But they should be reviewing everything and have a good idea on what's happening.
Fantastic. Absolutely love that breakdown. Fantastic. And so each of these roles are bringing different value to the business, and it's absolutely fantastic. One other thing that I wanted just to kind of, and I know I'm going to go back here a little bit, and so forgive me, everybody. I do this every once in a while. Before we get into the going long final three, one of the things that we were talking about before, Larry, is this whole concept of a real estate professional. And so sometimes we talked about, and once again, we're talking about principles here, but you'll speak to people and say, hey, listen, I'm a busy executive in a multinational, I'm in enterprise software sales, but my spouse is not actually, and my spouse is doing the real estate professional status stuff. Can you maybe talk to us? Are there, if one person's doing it, the other person is not, just at a general guideline, are there certain limitations that are placed on the person who is doing the real estate professional, but maybe not doing that full time? Or is that maybe not the right type of question to ask? And if I'm not asking the right question, is there something that you'd like to add there?
No, I think that's a great question to ask. And this strategy can work out perfectly for a spouse that does work full time, and the other spouse perhaps doesn't work full time or works less than full time. This could be a great scenario for them to consider, in that as long as they meet those guidelines that we talked about, 750 hours, more than 50% of their time, and materially participating in the rental related activity, it does open the door for them to now use that real estate professional status. Now, again, there are other boxes that need to be checked, documentation that needs to happen. But if the strategy works out perfectly, well, we have a high earning spouse that has an active W-2, and that's going to be a multi 6-figure, perhaps even approaching 7-figure range. Yep. And now you have another spouse that is actively in the real estate side, producing those passive losses, but still cash flow positive, we might add. That can now marry together, assuming they file a married filing jointly tax return. Mm-hmm. And those losses now can offset spouse A's higher earnings from their business or W-2. So it could be a really powerful strategy if it works out that way.
Okay, fantastic. And so once again, we're here, we're sharing ideas, principles, concepts. If this is something that is new to you or sounds interesting, and if you have not talked to your tax team, or your tax team is not comfortable, or you're looking for a tax team, I would suggest you probably reach out to Larry. He seems pretty comfortable with this kind of stuff. So I guess with that, Larry, I do want to get into the going long final three, but just before that, before we do get in there, can you talk to us a little bit more about, who is the client that you are typically helping today at Precision Business Strategies? Just so people that are listening to you today are watching the video, and I'm going to suggest everybody go check out the video version, of course, because you should be watching the video version. But who is the client that you're helping today, Larry? And so people could understand a little bit more about if it would make sense to reach out to you or your team.
Yep, absolutely. So many of our clients fall into real estate one way or another. So they have that common theme and background, but it's usually going to be folks like you just described, higher earning, higher net worth individuals that are either just getting into this space or that have been in and by this space, I mean real estate and or other assets, and are really trying to understand, how does this really work from a tax perspective? Because I've heard all the fun stuff, right? Of I pay no taxes, I can write off everything with the real estate, but how can I truly make it work? And so those folks, we sit down and do some very in-depth dynamic tax planning. And of course, we work with real estate businesses, funds, syndications, and help with them on the accounting and the CFO side of things.
All right, fantastic. So if that sounds like some direction that you're looking to go, or you're looking to make some changes, well, that sounds like Larry and his team have a lot of experience in that area. Can at least have an initial conversation with you. So, listen, with that, Larry, I think it's time for us to get into the Going Long Final Three, man. But the thing is, you're all right. So you already answered the question. My question was, are you ready? So you said, let's do it. Let's do it, man. I want to make it. Let's jump into this. So we started with you over in Frisco, Texas, just outside of Dallas there. I'd like to bring things back to my new adopted home side of the pond, and that is over here in Europe. So help us understand, Larry, what is your favorite European city that you've either visited or still on your bucket list to visit?
Yeah, so my favorite European city that I've had a chance to visit is Paris, France. And we spent, just over 2 weeks there some years ago. And it's actually the place where I got engaged. So it certainly has a special meaning in that front of things. So Paris is one of those places where there's hustle and bustle, right? There's a heavy flow, but there's also this underlying calm, serene kind of a thing that's happening too. And so if you imagine Chicago, New York City style vibes with a lot less noise or a lot less talking, that's kind of the thing that I got when we were in Paris. And so people were fairly friendly, and there was a lot of people watching. So we had a really good time over there, but that's definitely been my favorite place. And not to mention, the bread is good.
Yeah, it's a pretty nice place. My 1 year sabbatical that started 21 years ago started in Paris, France. And so if that gives you any hint of how enchanting, enchanté that Paris can be, well, that's it. So cool. So we got another vote for Paris. Surprise, surprise. And now I'd like to get to question number 2, Larry. And question number 2 really has a lot to do with, let's say it's the good fortune that I've had to be really exposed to and interact with lots of successful people. And Larry, I would consider you to be someone who's very successful. You talked about the different ways that you've interacted with people, the impact that you're having on others. And because of that, like hopefully one of the things that you would agree with me, Larry, is that, people that are really successful, they, unlike most people, when they put a plan together, they tend to execute that plan. They get the things right from the very first time, which allows them to go much faster than everybody. Don't worry, Larry. It's just a surprise, man. It's Larry's like super stoic. Everybody is super chill. Like, whoa, hang on a second. You got to check out his face. This is great. No, it's a joke. Of course. I mean, it could happen, Larry. You know that. But the reality is, people that are really successful, they tend to make like 20 to 50 times more mistakes than everybody else because they're always trying new stuff. And so because of that, I kind of mentioned that before, and it was definitely a joke. It was definitely a joke. But I do want to recognize something that people that are very successful do very differently than everybody else. And this is no joke. Because every time I've noticed someone who is successful, whenever they've had a relevant decision to make, they've made a relevant decision and they've made a mistake with that decision or a learning opportunity or whatever you want to call it. Whenever that's happened, every single time, number one, they've stopped and they've learned from that mistake or learning opportunity, or whatever you want to call it. But right after, they put different strategies, tactics, and actions in place to minimize the probability of that exact same thing happening again. Now, I don't want you to think about the mistake that you made or the learning opportunity or however you want to call it when things didn't work out like you planned them to work out. What I'd really like for you to focus on and share with the Going Long family today is, what is the lesson that you learned that we need to hear today to minimize the probability of that same thing happening to the Going Long family?
I think the greatest lesson there is taking a step back and really adopting this idea and this strategy of being you. And what I mean by that is we kind of have this world of inauthenticity, right? And not to beat down so much on social media, but that pressure of doing things right, executing at a high level, making no mistakes, grinding till the end, really impacts people's ability to be resilient, right? Because they essentially start to turn into something that they're not. We're all flawed in our own ways. We all make mistakes and we should learn from it. But at the core of it, if you could be you right? In a world full of filters and impersonators, just think about how awesome and how dope it is to just be you and execute at a level that is appropriate for where you're trying to take things. I think that changes your entire perspective and trajectory, and you stop executing for the pleasure of pleasing others and start doing so simply for the pleasure of self-fulfillment and where you're trying to go. And that'll also curb this idea that we beat ourselves down for making mistakes, because those are the foundational blocks to success.
All right, fantastic. So we want to get to those foundational blocks, help you to feel and be you, because at the end of the day, that's what's going to help you ultimately move forward faster when you're comfortable in your own skin and doing the things and recognizing the context of your life. Where you are is where you are, and you can do the things to accelerate getting to the next step, but be comfortable with being you. I appreciate you sharing that with us, Larry. And this brings it to question, the last one of the Going Long Final 3, man. This is really about helping us to fill our minds with knowledge. And I would love for you to share with us, what is one book that you would recommend to the Going Long family today?
You know, that's a tough one. If I had to put one book in front of the podcast today, it would be the book called Growth Gears. And this is a book by a fractional CMO company I think they're out of Atlanta, Georgia. But essentially what they do is walk you through a thought process of defining the growth for your company. And sure, there's a marketing undertone to it, but what it does is it helps you compartmentalize things in certain areas. And there are certain gears that are turned to actually grow the business. And it has implications not just for business, but also for life. And so as you turn those gears, you know what the outcomes are going to be, and it gives you a foundation to always go back and know how to pivot in the face of change. And so Growth Gears has been a really foundational book just for us in terms of marketing strategy, but also business strategy in general.
All right, fantastic. So Growth Gears, don't worry, everybody. We're going to make it really easy. All you have to do is click a link. Don't worry. Don't get stressed out. Don't feel like you got to stop your workout to write it down. You're going to forget it. It'll be in the show notes, everybody. Don't worry. Wow. Larry, man, these conversations just fly by, and today faster than ever, man. This has just been absolutely fantastic. I'm thinking about the beginning of the conversation, and you're telling us about the wonderful insights that you had from your kids saying, hey, listen, Daddy, will you come over here and spend some more time with us? And recognizing from there, you took us along your journey, right? And you helped us understand through the education space and what you were doing there. And then you recognized that, hey, listen, although you were enjoying this, you were bold enough and brave enough 2 weeks after or 2 weeks before to pivot and make a change and say, hey, listen, this is great. This has been foundational, but I actually kind of also like what some of my buddies are talking about over in the business side of things. And so you wanted to go there. You were 25, 35K. That was pretty good. But guess what? You wanted to be able to make an even bigger impact. And so as you continue to find your path, create your path, and begin to make impact, not just for yourself, but also more importantly for others. And you continue to do that today, and you're continuing to do that through Precision Business Strategies. I know that there are so many people that are like, Billy, will you just ask him the question and stop talking so much? Okay, all right, everybody, don't worry. I'm getting to the point. He's already shared it with us once before, but I would love for you to share with me and the Going Long family, Larry, what is the best way for us to find out more about you and find out more about what you're doing at Precision Business Strategies?
Yeah, I think the best way is to visit our website, which again is www.pb, like peanut butter, pb-strategies.com. There's a few insights that we post on that page there, so you get some ideas on the kind of work that we do. But there's also a huge button that says become a client, and we can schedule a discovery call to learn more about you, share more about our firm, and see if it makes sense for us to work together. And then as always, follow us on all of our social channels, which is Precision Business Strategies on LinkedIn, Instagram, as well as Facebook. And then you can follow me personally on Larry D. West III, as I mentioned earlier. I post a lot of information on effective tax and wealth planning strategies.
All right, fantastic. And listen, Going Long family, when you reach out to him specifically on the LinkedIn platform, make sure that you leave him a personalized invitation so that he knows that you've already invested time getting to know him, his philosophy, more about his business, and how he could potentially help you. It's going to make the two of you have a much easier next step in terms of conversation. So please do that. And then also he'll know when he's engaging with the Going Long family that he knows he's engaging with the A player. So listen, with that, Larry, I just want to say thank you very much, man. From the bottom of my heart, I really appreciate you deciding to invest your time with me and the entire Going Long family today. Thank you so much.
Thank you. I certainly appreciate the opportunity. And thank you all for tuning in and listening to us talk tax nerd stuff.
All right. Fantastic. They're used to me. They're used to me as well. So it's all good. Now, listen, just really probably like 15 seconds later, I just want to wrap things up with the Going Long family, and then we'll get you out of here. So listen, everybody. I don't know what else to tell you. I mean, Larry left it all. He talked about the strategy. He took you down into the weeds. He gave you the tactics, and he gave you ideas that you can think about, that you can talk about. You can reach out to him. He's made himself and his tax team available. If you want to talk to your team about it, you can do that as well. Make sure you check him and his team out on social media. Reach out to him. You've got his website there. We're going to include it in the show notes. And while you're doing that and sharing today's episode, downloading it, sharing it with your family and friends, I'll be here preparing for the next conversation. So until then, go out and make it a great day. And thank you very much.